Guys, how we doing? I'm Ryan Mack. Welcome back to Trading Guys. I had previously zoomed in my screen to 150%, 150 times to make it look better for you guys, but it looks fucking shit for me, so I've just fucked back out of it. Some of you have issues when you're watching these videos. I don't know why it is. Well, I know it's because I've got a fucking big screen, right? It's like a meter long screen, but I watch the videos on my phone and it's absolutely fine. So the answer is I really don't know why some people are like, I can't see the screen. I can watch it on that and it's absolutely fucking fine, guys. So I don't know why some of you are having issues on laptops or whatever. It will be a configuration type thing, but I don't know why it is. What you could probably do is go on to your laptop and increase the size of your screen. So what I was doing previously, right, was this. Look, I was coming here, I was going to settings, display, and then here, look, scale. I can make things bigger, right? But it just makes it look shit. It might look better for you, but it looks shit for me at that scale. So that's why I jumped back down. So what I'm going to do just now is I was going to go through technical analysis, but you know what? I'm not going to, because I've already fucking done it. I'll show you right now. If you look at the video I done on Thursday, technical analysis isn't going to be any different from the video that I just done on Thursday, right? So come across here to the Trading Guys YouTube, and there it is right there. Look, this trading strategy has an 80% strike rate, blah, blah, blah. That's just generated fucking bollocks, as you know. But they would go, look, Forex technical analysis, this one right here, Forex technical analysis and banking data. That's where I cover technical analysis and banking data, right? So there's no point in me going through it again today. Just go back and watch that video, guys, and you'll see it. I only did it on Thursday, so it's fucking brand new. Nothing is going to change, right? That means we can get through this fundamental one quicker. It's going to go none. So as you know, I do each individual currency by themselves individually, apart from AUD, China, and NZD, okay? So we are on the 27th, so you check the dates this week to make sure it's the correct one. It's the correct one, and let's just have a look. Prime rate, same. Credit card spending in easy year on year is massively up, so that's bullish for NZD. Why is it bullish? Because if people are spending money on credit cards, it means they're buying more shite from the shops. If you're buying more shite from the shops, what are you doing? You're stimulating the economy, right? If more things in the shops are being bought and sold, that means more things are being imported, okay? And potentially made if it's a local brand. So, flash manufacturing PMI, bullish, bearish. Now, don't get confused. It went from 48.7 to 49.9. It's still bearish. It doesn't become bullish until it passes 50 and upwards, okay? It means things are getting better, yes, but it's still bullish. It's still bearish, sorry. AUD CPI month on month has dropped, and it dropped worse than they thought. However, CPI year on year has dropped by 2 points, 0.2, sorry. Trimmed mean CPI month on month has increased. Trim mean CPI month on month. Employee change, that's massively changed. Employment change has massively went through the roof. That's fantastic. It's massively bullish. Unemployment rate has dropped. That's also bullish. House spending has increased dramatically. That's also bullish. Okay, so AUD is fairly bullish. You could keep it in. So I had it in neutral. I moved it from strong to neutral, right? And I had it in neutral last week. You could keep it in neutral because it's kind of weak bullish, okay? But what I'm going to do is I might start putting the ones that are weak bullish in strong, and the ones that are weak bearish in weak, and the ones that are neutral in neutral, okay? Just because I think it makes it, from feedback, I think it makes it easier for people. Although I can sit here and go like that, right, AUD is neutral, but I know in my mind it's weak bullish. You might not know that because you're still coming to terms with how to piece together all the fundamentals, right? And I don't mean that in a derogatory way, as if, well, you don't know what you're talking about. I don't mean it that way. I just mean if you're watching my videos, it means you're potentially still learning fundamentals, okay? And that's all I mean by it, is it might be easier if I just put, even if it's weak bullish, if I just put it in strong, okay? So I'm going to start doing that now. So AUD, I'm going to put in strong. And you could even put AUD with a W beside it, a little small W, so that you know that means, oh, it's weak. Okay, weak bullish. You could do that. It's fine. NZD, I'm actually going to keep in weak. Yeah, because overall, although there is some good news and you'll see some bullish movement, the economy is still pretty shit, guys. There's nothing really good happening in the economy. You know, a little bit of good news doesn't mean that, oh, you know, it's suddenly out of the red. So next week, what have we got for news? Manufacturing PMI, non-manufacturing PMI for China. So why do we watch China? Because if China comes in strong, it'll mean that Australia's going to come in strong again next. As a kind of knock-on effect, commodity prices year on year, okay, AUD, we want to see that, especially because Australia is a massively commodity-based country. It's how they make most of their money is based on commodities because they've got the mines everywhere, okay? Good trades balance, okay. So not a huge amount of news, but there is some news that we want to see next week, okay? So now, moving on. CAD is weak. Before I even look at it, it's going in weak because it's shit. Might get some good numbers here. Let's have a look. CPI, that's strong. Stagnant, okay. Stagnant, okay. Bullish, a little bit of bullish news. Bullish, okay. It's had a good week. That's it. It's not, the economy isn't strong by any means. Next week, we've got GDP month on month, bank holiday on Wednesday, manufacturing PMI on Thursday. Nothing major, okay. So for me, CAD is still weak. And if we come across here and we look at oil, remember the Canadian dollar is extremely closely pegged to oil, okay? So oil's fucking melting right now. So you're not going to get any strength from the CAD, okay, unless it starts bouncing up from this zone here, starts coming back up again, okay? Which I doubt. Because if the Strait of Hormuz now starts to open, so what's happened now? Let me backtrack a little bit there. You've just seen reports on social media platforms and news platforms that the US has now struck Iran again. It's like, fucking hell. It's struck another couple of, I think it was drone supply bases or bomb storage places and drone storage places right there. US struck them. So because of that, the IRGC then started striking again US military compounds. I think it was yesterday or today. I only saw it this morning, so it was one of the two. I only seen it when I woke up. Started striking military bases of the US, which are in like Dubai and Kuwait and all this kind of stuff again, right? So what you might find here is this is a perfect setup. That type of setup will make the market go, oh, oil's going to be expensive again, and it'll start coming up. When it gets to here, right, everything again will settle down. You might find that a news event will happen that, oh, Iran have now opened the Strait of Hormuz for everyone. What will happen then? Fucking hell, an influx of oil tankers. What will happen to the price of oil? It'll fucking bounce round about here and it'll go fuck off and it'll start flying down again, right? So this is really what I'm looking to see from oil. All right, perfect zone right here if you want to mark that up. It's around about $83 is the bottom, 86 is around the top. Okay, it could come to this part here, fine, but I think it's probably going to come to here. Previous support, once broken, becomes the new resistance, right? So you will get some up. Oh, fucking hell, we've bombed everywhere again. You get this upwards, people will be on buys, and then you get the real move, which will be the Strait of Hormuz is opened and it will just start fucking tanking again. Okay, that's potentially what I'm looking for. That's CAD. Let's move on. CAD is weak. CHF, we don't even bother looking at that, right? Because the data is always the same. That never changes. So CHF is going to be in neutral. It never goes from strong to weak. It's always flat. That's why people always say is safe as Swiss. You trade the Swiss franc not based on data being bullish or bearish. You trade the Swiss franc based upon market sentiment. Is it risk on sentiment or risk off sentiment? If it's risk on, if the markets are risk on, you're sometimes looking to sell Swiss franc against stronger economies like the US or GBP or something, right? If markets move to risk off, like USD CHF, you'd be looking to sell that pair. So you'd be looking to buy the Swiss franc, which is a sell in USD CHF, okay? So you trade that predominantly based on risk on, risk off. China, we've already done. Euro, let's have a look. Okay, okay, bullish, bearish, but it's getting stronger. Bullish, bearish, and getting weaker. Bullish, it's getting slightly weaker, but still bullish. It's above 50. Bearish, bullish, bearish. So the bonds are showing a little bit of bearish action, and bonds tend to move before the currency. Okay, so you're probably going to see a little bit of the euro drop coming up. That may not be a full time drop, but you might see a pullback, right? And euro getting a little bit weaker because if bonds drops, then later the currency follows in whatever direction. German GFK consumer climate. Okay, that's just consumer climate stuff. Fuck that. Next week, what we got? Yeah, we've got quite a lot of news next week, guys. CPI year on year, money supply, retail sales, German prelim CPI, French, Spanish, Italian. When it comes to euro, we only really care about French and German because they're the two big players that actually make the market move. However, of course, we do still take a look at Italy and Spain. Core CPI flash estimate year on year. Yeah, there's basically the bottom line is there's a lot of news next week for the euro. Okay, so stay tuned. It may be a bit of a choppy week with mixed data, might be a flyer if we get good data, and so on. So for me, euro is it's kind of neutral, but it's also kind of weak bullish. Okay, so I'm going to keep it in weak bullish for now. I'm going to put it over at strong because I'm now going to do my new layup, right? So I'm going to put euro in strong, but you could put a small W beside it so that you know in your mind, okay, it's only weak strength. Okay, let's do that. Moving on to the poon. Smackaroonies. So we've got GBP, flash manufacturing PMI. Bullish, yes, it's getting weaker, but it's still bullish. Why? Because it's above 50, right? Anything above 50 is bullish. And when it comes to PMIs, above 50 is bullish, below 50 is bearish. Okay. So still bullish, bearish, bearish, bearish. Okay. So not a good week for the pound. This week coming up, what have we got? Mortgage approvals, that's a good one. Money supply, yes. Shop price index, current account, final GDP, 10-year bond action. We want to see that because remember, if the bond action comes down, then the following week, that if the bond action comes down, it shows the bond auction, sorry, comes down, it shows weakness, right, later on in the currency. If it goes up, it's a sign of strength later in the currency. Now, why is that? It's very simple, supply and demand. Okay, so I do have videos and bonds, but it's been a long while since I've explained it again, so I will explain it for any newcomers on this video. How does the bond market affect the currency, right? The strength. So, see if we look here on the left-hand side, you'll see it says there central bank rates. Okay. Now that's just essentially interest rates. Now, if you look here, it tells you a currency's central bank rates, which to an investor, a central bank rates of a country is an interest rate. They're basically telling investors what interest you will get if you invest in their economy. Okay, so Australia's saying if you invest in my economy, by buying bonds, I will give you 4.35% return on your money. Happy fucking days. Pound and USD are right behind them, saying if you invest in us, we will give you 3.75% interest per year. Okay, so if you, in order to invest in a country and an economy, what do you have to do? You have to buy the bonds, right? So you're probably thinking, well, all right, I get it, but why does that have an effect on the currency? It's very simple, supply and demand. Okay, if you want to invest in a country like AUD, or in fact, we're talking about pound here, so let's just say pound. If you want to invest in a country like in an economy like GBP, okay, in the British economy, you have to buy British bonds. Okay, if in order to buy British bonds, you need to purchase bonds in the currency of the country in which you want to invest in. Okay, so let's say you currently own New Zealand bonds, and you're like, oh, fucking hell, I'm only getting 2.25%. This is shit. Where can I put my money? And you think, Australia's got a lot of problems right now, although it's offering me more. It's got a lot of problems, not very stable. Oh, pound's 3.75, still a good return, better than what I'm getting now. And I think it's more stable than Oz, so you prefer to go there. Then you then sell all your New Zealand bonds. You will get, let's just say, your $100 million back. You then have to convert. This is the key point here. You then have to convert that 100 million New Zealand dollars into British pound sterling, right? Which creates a huge demand for the pound sterling, okay? And a huge supply for NZD. So the more supply of NZD brings weakness to that currency. If everyone tries to buy British bonds, they have to convert to pound sterling. By converting to pound sterling, they drive this huge demand for pound sterling, which then gives strength to that currency, gives strength to the pound. So that's how bonds affect the forex market, and that's why we like to have a look here and see where is it the bond auction, right? And that's why also here I've also got, you can see it right there. Look, I've got all my bonds, so I can have a look and see if bonds are going up or down. So this is telling me, like, bonds are coming down, right? So US bonds are coming down. That gives you a good indication that the currency later will start coming back down. Now, if we look at a USD pair right now, let's just say USD CAD. Where are we? Look, we are in a prime zone for potential sales. Now, overall, I would be buying this, okay, because the USD economy blows the Canadian out the water. But my point is, it's in a great value to sell from right now. And you'd be looking at the sell from here to here, and I'd then be looking to buy from here back up to here, right? That's the kind of move. Boom, 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 boom. Okay, that's the kind of move we're looking for. And if you look at that, you can see that potentially based on bonds, showing huge weakness. Later on, the currency might show weakness. I'll jump back again. You might get this weakness here. Boom, 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 boom. Next minute, bonds will magically start flying again. People will start buying them, and it will come here, and this will take off. Okay, there's 100 things that can happen to obviously build that picture, but I'm just trying to give you a breakdown, all right, of things that can happen and why we care about bonds. So next week, we've got a few things that we want to see. All right, nothing major, but a few things we want to see. For me, I'm actually going to put pound as weak, but it's going to be weak bearish. Okay, weak bearish. You can put a W beside that again. Sorry. Yeah, you can put a W beside that. You put it under weak, but put a W beside it so that you know that it's weak bearish. All right. I'm going to fly through these last two. We're at 18 minutes, so we're doing quite well. We've only got two left. Sorry, Japanese yen and USD. I'll fly through these. Bullish, sticky. So it didn't come in as high as anticipated, but it's not less than last year. Okay, so fantastic. SPPI year on year is sticky. Okay, that's some good news for the Japanese yen. Tokyo core CPI year on year has increased. Fantastic. So you're starting to see that Japanese yen is starting to pull itself back out now. If we come across here to, I believe it's gold, I've already given an example of market cycles. Here we go, right? So this is an example of market cycles, okay? So let's just say I'm saying GBP is strong, okay? When I'm saying that, because I'm talking about swing trading, which is, you're looking at the next 3, 6, 9, 12 months, I might be saying, right, the GBP is in this cycle here. It's in this up cycle. And if you look at prime market terminal, it might say GBP is weak right now. Well, that's also true, because I'm talking about the strength of overall, right? I'm talking about all this, the whole strength, the economy is growing month on month, year after year. It's in that phase, right? It's in this upward trend overall. But if you look at prime market terminal, that might say GBP is weak. Now, they're also correct, because they're talking about this week. They're talking about this segment right here. They're talking about, okay, it's weak this week. Okay, week 1, week 2, still weak. Week 3, neutral. Week 4, neutral. Week 5, week bullish. Week 6, week bullish. Week 7, bullish, bullish, bullish. But the whole time I've just been saying it's bullish because they're talking about what's happening over the next couple of weeks, and I'm talking about the overall. Okay, so both of us are actually right. Now, when it comes to Japanese yen has been down like this for fucking ages. Well, GBP and USD have been going up. Then you get the plateau. GBP and USD are around about this region here, where they're potentially going to start to come down. Okay, you might see it come up for a little bit more, then plateau, and then start to come down. Japanese yen are already so low and have been for such a long time, they are potentially now on this uprise. Okay, so they're slowly building, getting themselves out of this mess, right? And you'll see all the other pairs that were previously strong and high will potentially start to come down for a little bit of time. Okay, it's just a market cycle. That's all it is. Look, and you can see that Japanese yen have finally increased their central bank rates to 1%. You may not think that's a big deal, but it was minus for about 10 fucking years. Okay, so that's a pretty big deal in the case of them pulling themselves and finally pulling themselves out of this mess and finally getting some good numbers coming in. Okay, so I'm not saying it's a strong economy. It's still weak in my opinion just now, but they are getting some good numbers, and you could potentially say that in the short term we're getting some weak bullish momentum just now. Okay. In fact, what is Prime Market Terminal saying about them? Let's have a quick look. Where is it? Is it here? No. Oh, here we go. Let's have a look. Where's the bloody banking? Okay. Japanese yen. See, they're saying it's neutral. See? Which again lines up with my diagram about it being around here. Fucking lovely jubbly. Next week, we've got some good news. Not good news. We've got some news that we want to see. Retail sales, unemployment, manufacturing index, housing stats, final manufacturing. Yes, we want to see all this, okay? Bond auction again. So there is a lot of news that we want to see next week. But for me, they've got it down as neutral this week. That's fine. I've got it down as the economy as a whole is weak, okay? Now, last but not least, guys, let's have a quick look at USD. EDP weekly employment change. Okay. Bullish, 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 bearish, 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 sticky, bullish, 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 bullish. It's dropped slightly, but it's came in way higher than they thought, which is fantastic. Durable goods, bearish, bullish, bullish, bearish, bearish. However, came in as expected, so it won't have a bearish effect on the market. Bearish, sticky, bullish. Okay, so yeah, USD is strong for me, and I believe it's going to get stronger. Next week we've got Chicago PMI, HPI, JOLTS. Oh, is that NFP next week? Yes, we've got. So next week is NFP week. Sorry, I'm fucking losing track of time here. Well, fuck, it's the 3rd of July next Friday. Fucking hell, guys, that is mental. Manufacturing, blah, blah, blah. So the point is we've got tons of news next week. Okay, remember, next week is NFP week, so be extremely careful if you're trading USD next week. What you normally find is you don't get a lot of big moves. They'll just be kind of positioning moves, and everyone's getting themselves in alignment and in position for what's anticipated to come through NFP, okay? So they think it's going to come in less, okay, which would be a bearish move on the market. Unemployment is looked to be higher, which is not good. Unemployment claims, yeah, and unemployment potentially sticky. So let's see, guys, okay? Just be careful of next week. You know, NFP week is always a pretty wild week, not just a Friday. There's a lot of like bullshit moves because traders try to position themselves in the right areas to take a good trade from either way, depending on this result, okay? But for me, USD is strong, okay? Now, I'll run through it again. Strong AUD, Euro, and USD, okay? Now, just remember, AUD and Euro are weak bullish, and in my opinion, USD is just plain out bullish, okay? Weak NZD, Canadian dollar, GBP, and Japanese yen. GBP is weak bearish. Okay, the rest of them I would say are just weak. Neutral is Swiss franc, CHF. Okay, that is it. Now, guys, we have in our Discord a free section. Okay, of course, you're not going to get the full whack here. You're not going to get the full thing, which all of our premium members get, because it's a full-blown mentorship. We don't just say, here's a video, lads, fuck off, good luck. We do have courses that they watch through themselves, because you have to put the work in. No one can do it for you, lads. But we do mentor them as well. We guide them. We give you every single trade that we personally take ourselves, okay? And we do have a free section. Is it maybe this one here? What is it? It's one of these. It's one of these sections. I don't know. I don't deal with this side of shit. But it's one of these sections where we have it free, and you will have access to my entire A to Z trading course. If you sign up even to the free Discord, you will get full 100% access to my A to Z trading course. Where is it? And I'll just show you it here. Starting from the beginning. Wait till I find it. It's all been moved around. Oh, here it is. So look, here is my entire trading course here, guys, which I filmed over at the studio. Sorry, here it is here. I've got everything on here, okay? Everything you can imagine is on here. And what I've done is I've made the videos like 3 to 5 minutes long. So it's not like death by PowerPoint, right? There are a couple of videos which maybe go to 15 or 20 minutes, and it's because there's just really no choice, you know? But all these other videos here, you go, fucking hell, there's loads of videos. Yes, but they're like 3 to 5 minutes. Look, there's one there, 2 minutes long, 2 minutes, 40 seconds. 20, that one's 20, is it 23 minutes? Yeah, that one's 23 minutes long, okay? Because I must obviously go in depth on that one, explain why. 2 minutes, 44 seconds. In fact, maybe I'm talking shit. No, it's 23 seconds. That's how quickly that is. Sorry, I thought it was 23 minutes. 2 minutes, 44 seconds, right? So you can see 3 minutes, 12 seconds. So you can see I fly through the videos. And I've got everything here, okay, from what is trading. If you're a complete newbie and you're like, what is trading? I've heard of it, but I don't know what it is. Is it a scam? Is it gambling? I've got it all here. Can I quit my job trading? No, don't be stupid. Is Forex a scam? No, and I explain why. What is Forex? Day one, basics of Forex. What is a stop loss? What is a take profit? What is a candle, right? I've explained everything. Now, of course, if you're someone who knows all of this stuff and you don't really need that level of basics, you're like, oh, I've been trading for 2 years, but I'm just not profitable yet, blah, blah, blah. You can just jump straight up here to video 12, I believe it is. There we go. Yeah, this one here. Retail and institutional traders. Oh, you don't need that one. Market cycles. I would start at video 15. Video 13, market cycles. Okay, and then right after that, you'll see that my shirt has changed color. Okay, so it's the one before my shirt changes color from navy blue to white and a cream vest. Okay, and this is the money stuff. Okay, this is where everything gets spicy, and I explain to you what all of this means. Okay, in my weekly videos, I just run through it. But on my trading course, I explain to you why PPI has an effect on the market, whether it's bullish or bearish. Average earnings, why? Jolts, explained. Employment, unemployment, NFP, all explained. GDP, explained. House price index, explained. Purchase manager index, PMI, all explained here, guys, okay? And then here, I teach you how to put all of that together. Technical analysis, fundamentals, news, geopolitical events. I tell you how to put all that together and how you place a trade. And actually, if you look right here, wait, I'll zoom in. You can see here, I don't know if you can see it, might be small, but right there, I actually took a trade live while I was going through the course. I actually said to the people, I said, guys, there's a fucking trade here, I'm going to take it. So I took trades live. You can see that on this video, okay? So you can see that we actually practice what we preach. That was previously £250 for the entire course. For next week, we are going to give it away for free for anyone who joins the free side of our Discord channel. Okay, I'm Ryan Mack. This is the trading guys. Next week, don't get FOMO. Be careful. Don't overtrade. Don't over risk. If you see a trade, take it. If you don't take it. Just sit in your hands and wait for the right opportunity. Okay? Much love. Take care. Bye bye.